I've been trading this strategy for over 12 years now. I'm going to show you my exact setup step by step so that you can start making money in trading like many other traders before you. We're going to first start off by looking at the time frame sequences that you should be looking at and markets. It's important that you watch till the end because I'm going to give you this flow chart as well as talk about the common mistakes that I see traders making after 12 years of doing this. So let's get straight into it. The most commonly asked question that I get from traders is what is the best time frame sequence and what markets should I be looking at? So I have a photo right here of the time frame sequences that you should be looking at and what markets. So let's quickly talk about that for 60 seconds. Now, if you're going to be long-term position trading or swing trading, you're probably going to be in this bracket right here using one of these higher time frames, either the monthly, the weekly, or the daily as your highest time frame, using your lower time frame, your 1 hour, maybe 30-minute, or your 4 hour, 2 hour, or maybe even the daily. It really depends on which time frame sequence that you're using. And if you plan on swing trading or long-term position trading, you're probably going to be looking at 20 to maybe 30 markets, I'm guessing, because your long-term swing trading or position trading, the markets move a lot slower. It's not better than day trading or scalping, but everyone's different depending on their lifestyle. And some people trade better swing trading, you know? And then if you plan on scalping or day trading, you're probably going to be using the 4 hour or the 1 hour / 30 minutes as your highest time frame. And for your lower time frame, you're going to be using the 5 minute, 1 minute, or the 15 minutes. So, I mean, you can see it right here. I don't know why I'm talking about it. If you are going to be day trading or scalping, don't trade more than 3 markets. I personally trade 2. I primarily focus on gold and the S&P. So typically for me personally, I try to lean towards like this time frame sequence or the intraday time frame sequence using the daily 1 hour or daily 30 minutes. That's typically what I trade, okay? Okay, so now that we got that out of the way, let's talk about the top-down analysis. We always start with our higher time frame, okay? The higher time frame, we only use 2 time frames, the higher time frame and our lower time frame. The lower time frame is used for our entries, exits, trade management, our confirmation, and our higher time frame is used for drawing out higher time frame levels and determining the trend. We're going to talk about that, but the 2 purposes of the higher time frame is to determine higher time frame levels and determine the trend. Okay, so those are the 2 purposes, and that's why it's right here as number 1. What do we do on the first thing, depending on the time frame sequence that you're looking at and markets? The first thing we do is identify supply and demand zones and determine the trend. That is what we are doing. So if I'm here on gold, I want to first start off by drawing out areas of supply and demand. So I'm going to take a photo of this. Actually, I don't even need a photo. I can just draw right here on a chart. I'm going to first draw out my areas of higher time frame supply and demand zones. Also maybe support and resistance. I'm a fan of support and resistance as well. It is a nice extra confluence to have in your trading. It definitely does help. So in this case, we have a demand zone down here, nice little rally-based rally, very strong and balanced to the upside, letting me know that a lot of buyers stepped into the market. Same thing here, right? Very strong and balanced to the downside. Same thing up here, very strong and balanced, and same thing up there. So I'm trying to highlight the origin of the base. But back here, this is a really good support and resistance line across the board right here. So a lot of people might be looking at this previous level thinking, oh, it's support and resistance. That's fine too, right? We're just trying to identify our higher time frame levels, okay? So that's what I'm trying to do. What the second purpose is once we've done the first thing is drawn out our higher time frame levels, our second purpose is to determine the trend, okay? Which is really important because when we start talking about trend, when I look at people's trending market stats, win-loss percentage, 63% versus 58%, nothing too crazy there to be honest. Trading with the trend, 14 winners, 7 losses, versus trading counter trend, 7 winners, 5 losses. Same thing here, trading with the trend, 19 winners, 11 losses. Counter trend, 7 winners, 5 losses. Honestly, 9 times out of 10, when I do a one-on-one review with traders, I even just did one yesterday, and we were looking at his stats and we're like, yeah, like 9 times out of 10, like when people come to me with this stat, like They all come to me with the same stats, but it's until you see it for your own experience, that's when you're going to start believing in it, and you'll be more disciplined in your trade setups, which is why I believe it's so important to have that, trader that you can actually work with directly one-on-one and fix the mistakes, because there's a lot of mistakes that traders make, but that's a different story. But determining trend is really important. Now, how do we determine trend? It is going to be here in the book for you. Those are zones, how to draw out supply and demand zones. Right here, uptrend, downtrend. Let me scroll in so that you guys can see. Typically for an uptrend, higher highs and higher lows, right? We're blowing through structure to the upside. We're making higher highs and higher lows, and a downtrend, lower lows and lower highs. So look at a chart. I mean, you should be able to look at a chart and kind of create a general base idea of what the trend is, right? So when we look at gold, it appears to me the trend is down. You're probably not going to say this 1 hour time frame is in an uptrend. I think most of us would say no. Maybe you do, that's fine. Maybe super long term, yes, we're in an uptrend, but relative to what's happening over the last 50 candlesticks, it has been trailing down. It's been taking out previous session lows. We're in a downtrend. So that is the second thing we do. Right? We determine our higher time frame levels, we determine our trend. What our next step to do here? That's it. That's the only two purposes on the higher time frame. Okay, so if we go back to this, because we only trade inside higher time frame levels. Higher time frame, we draw out our supply and demand zones, we determine the trend. This is when we start going down to our lower time frame, and this is why it's a flow chart, because it keeps you out of trouble. I'm a big fan of these flow charts because it, like I said, it keeps you out of trouble. Right? And so the next question that we have to ask ourselves, is price inside this level? Is price inside our higher time frame support and resistance, higher time frame supply and demand zones, whatever you want to call it, right? Is it inside? No, it's not. Okay, we cannot trade. Okay, we must trade inside the higher time frames. You can see here, can we trade any one time frame setups or breakout setups? Those are different setups. I will upload a video on Monday. So let's have a look here. No, we can't. So we're not inside higher time frame zones, so we can't trade. So if we go here to gold, we're not inside higher time frame supply or demand zones, so we can't go any further. We must trade inside these levels, okay? We gotta remain disciplined. That's important, all right? But let's say, for example, we are. Let's go back here, and yes, we are. We have price inside our level. Do we yet have confirmation? Well, let's talk about that, right? Because yes, we do. We need to take the trade. No, we don't. We don't take the trade. We skip it and move on, right? So what we're waiting for is confirmation. And this is probably one of the most important tips that I can give you if you, or when you trade this, hands down, is making sure that you have quality confirmation. What is quality confirmation? In fact, it's going to be right here. Here in the top-down analysis, right here, waiting for lower time frame confirmation. Every confirmation on a lower time frame, I'm going to have this. It's going to be trend lines being broken, opposing pivot point zones being removed, and strong quality zones being created. So what I'm trying to do is I'm waiting for prices to come back up into here, and then I go down to my lower time frame. So in this case, maybe a 5-minute. And what price is going to do is it's going to be making higher highs and higher lows, and higher highs and higher lows. What I'm waiting for is very clean evidence of confirmation. I want to see structure being removed. So this area being removed, right? Momentum lines being broken, and strong quality zones being created, supply zones. It's so important because, let me go like this. Every trade setup that I take is going to primarily look like this. You're going to have lower lows, lower highs, and then prices, say, breaking downward momentum line, the opposing pivot point zones being removed, and a very strong quality zone being created. This is all going to be occurred within 1 to 3 candlesticks. If it's taking 8 candlesticks to do these 3 things, this is break of structure, right? Price is turning inside out on a smaller time frame. This is letting me know the higher time frame buyers or sellers are now taking control, right? Because you understand if prices are going to touch this level and sell off all the way down here, we have to have evidence. It's the same thing I have here in this book, right? I mean, why am I showing you this? I can just like show you this here, okay? It is the most important, right? So we have prices going into our higher time frame level and we're waiting for confirmation, okay? Ideally, you want this to occur within the first 3 candlesticks, okay? 3 to 4, maximum 4, the sooner the better, because when I look at people's entry time frame, good quality setups versus average or poor setups, 9 times out of 10 when traders come back to me with this one-on-one, they 9 times out of 10 come back to me with far better results talking about good quality setups versus poor setups. All right, 12 winners, 5 losses versus a poor 3 winners, 6 losses. I mean, by all means, if you want to take poor setups, that's up to you. But the trick is knowing how to identify that. Quality setups, 19 winners, 3 losers, 1 winner, 5 losses when trading a poor setup. 9 times out of 10 when I complete these one-on-ones with traders in the Moneyball trading program, they realize this for themselves and they come to me with the same results, right? Now the trick is, how do you identify that? What makes a good zone over an average zone? When should you avoid certain good setups? That is extremely important because a lot of people will watch these videos and they just get the 10% of the iceberg. It's really important that you listen to this because we're going to go into trade reviews and I'm going to show you examples right here of, you know, why I don't like this trade, okay? But you know that image of like an iceberg where you only see like the top 10% of an iceberg and 90% of it's down below? I'll show a picture of it on screen. It's the same thing in trading. It's the same thing with me uploading a YouTube video that can be 20 minutes long. I'm talking about something I have 12 years of experience, right? I can only show you the top 10%, not because I'm trying to hide something, okay? It's because there's so much goes on into it that you will feel overwhelmed to some point of like, wow, what about discretionary trading and intuition? What about mechanical trading? What about trading psychology? What about having a trading plan? What about reviewing? What about price action? Considering what other traders are looking at, volume, level 2 dome. Like there's so much things to know what goes into a quality setup. Trade management, that it's a lot to throw at somebody, right? So this is why having that direct coaching is so important. Just to work with someone directly who's been doing it for so long and just cut right through it. So let's talk about some trade setups, all right? So let's talk about this one. So the first thing I did on crude oil, higher time frame. Let me just take a photo of this so that you guys can see, because we got to talk about entries and that type of stuff. So in this case, we had prices going up back here into higher time frame supply. We have higher time frame supply up here. We had prices coming back into it over here. So what I'm going to start to see, if this level is going to hold, I'm going to start seeing confirmation going back to this photo over here, right? Higher highs, higher lows, and then prices selling off, breaking structure, right? And let's go back to that photo right here. You can see this, higher highs, higher lows, higher highs, failing to make higher highs now, which is a good sign, and then we're selling off, right? So we're going from higher high, higher low, higher high, to actually failing to break to new highs, to now selling off. This is my confirmation. That is exactly what I'm looking for. And notice how this is all happening within 3 candlesticks. 1 candlestick, 2 candlesticks, 3 candlesticks, maybe 4. All right, we'll give it 4. But it did all those things in 4 candlesticks, right? Not like this trade over here, where this guy came to me and this was his confirmation. We might have broken momentum line, trend line. Sure, that's one indication of prices turning inside out. It did take out the pivot point. It did take out this level. It definitely did. But look how many candlesticks it took. It took 1, 2, 3, 4, 5. It took like 12 candlesticks to do that. That doesn't really tell me that there's a significant imbalance. There's a change that is happening, right? It's just price slowly turning over. But I'm not interested in doing that, okay? And these things do help the quality of the trade setup. They definitely do. So let's talk about entries and stuff like that, entries and exits, because I know a lot of people ask questions on that. They're like, oh, where are you entering? Where are you exiting? This is definitely what I would do. This is what I do. This is my supply zone. So what I'm going to do is typically I'm going to enter here on the pullback back at my proximal line. So if that was my confirmation, I'm going to enter on the pullback. So like same thing, if we had this, lower low, lower high, I'm not entering here, I'm not entering there, I'm not entering here. I'm entering back when prices pull back into my demand zone down here. So once prices come back, that is where I'm entering back at my proximal line here at the demand zone. Same thing here. Where is this? Oh, that's a different trade review. Different. We've got a lot of trade reviews. This is good stuff because I like showing you guys examples. It grinds my gears when people just talk about something for like 10 minutes and they show you one example and then they say, okay, good luck, bye. It's like, whoa, what about this? What about that? What about that? And this is trading, man. Like you're gonna come up with a bunch of different scenarios and how do you interact and how do you react off of that, which is why, like I said, coaching is so important. This is just a YouTube video. But let's talk about this. Yeah, so I'm going to enter here on this pullback. My stop loss is typically going to be above or below structure. That's typically what it is going to be. I won't place it directly right above. I won't do that. I like to give it a little room to breathe. The whole point of your stop loss is not necessarily just for risk management to say I'm only okay with, say, losing $100 per trade, but it's also at what point is your trade no longer valid? And that's something you have to consider. At what point is your trade no longer valid? Okay, and so maybe here at this point, that's where it's no longer valid, so that's where I will have my stop loss. Okay, we could talk about re-entries. Oh my gosh, there's so much things, so much wonderful things. Okay, so we get filled, we got our stop there. Where's my take profit? Typically, this is what I always go with people. I say early on when people start working with me, don't worry about your take profit because this is something that we will adjust because everyone's different. If you go for a 1-to-1 straight up here, you're going to have a higher win rate than somebody going for 2-to-1 down here, right? Everybody's different depending on their overall like strengths and weaknesses as a trader. Me, I like to have a higher win rate. But with that, I'm going to have a lower reward to risk, okay? But typically, I will either get out at a 1-to-1, maybe a 1.5-to-1, but it's always changing depending on the market conditions, okay? It's never mechanical, 100% mechanical. You really can't be. It's very difficult to be that. And to actually hold a significant edge in the market being strictly mechanical, very, very difficult. Yeah, that's kind of my thoughts. Let's go to another trade and we'll talk more about entries and exits. So this is a buy setup, all right? So this is a buy setup. First thing we do, we draw a higher time frame supply and demand zone. So we had a demand zone here. Prices come back over here. I'm looking for buying opportunities. Here we had prices going into it, lower low, lower high, lower low, lower high, and then boom. That's something I like. A very strong move to the upside. Breaking momentum line, strong zone created, all within 3-4 candlesticks, and that is my demand zone, okay? So I enter here on the pullback, I have my stop loss below, and this one was a stop out. Where would I target my take profit? Probably right around here, right below kind of this resistance opposing this supply zone. So I would look to get out maybe at like a 1.5-to-1 or something like that. That's probably what I would look to do. Maybe if I want to carry on and have a runner, I'll have a runner. But I tend not to do something like that. Let's talk about another trade setup. Let's talk about this one. Nice little support and resistance, considering what other traders are looking at. Once again, this is a swing trade. Always start with our higher time frame. So this is the Canadian. Previously, we were in a very sideways market, very rangy market. And so we had this brilliant resistance block area right here. So if and when prices return back into this area, I'll consider looking for shorts. I'm okay with it. So prices return back up into that area, I'm looking for selling opportunities. We have prices going up, higher highs, higher lows, higher highs, higher lows, and then we start going sideways. And then we get the prices breaking to the downside, right? So in this case, the confirmation came a little bit later, as in prices going from uptrend to sideways to now going down here. So this would be my level. Same thing, entry. There's my zone with my stop loss above here, or maybe my stop loss above there. That's fine. How did I manage this trade? It looks like this is going into I could bust into this, and that's actually why I uploaded another video on this. At what point should you close your trade? Because this is going to what separates break-even traders from consistently profitable, focusing on good setups, but also trade management. I got filled here. Then prices go like this, higher highs and higher lows, higher highs and higher lows. Sells off, and then higher highs and higher lows. Why am I remaining in this trade? I need to just cancel the trade altogether and get out of it altogether. I mean, it's like the stupid mistake. Why are you sitting in this trade still when this thing is just slowly grinding up against you? You need to cut your losses early and get out of that position, right? Which is like one of the biggest things. I've uploaded a video on it before. It's honestly probably one of my top 5 videos. I will have it in the description below, talking about discretionary and intuition and trade management. No, I think it's trade management. I'll have them both. I'll have all of them. They're all there to help you guys become better traders, right? And so I want to look at one more trade review. Actually, let's look at a members. Let's do that. So let's see. One time frame. These guys are all taking one time frame. Oh my gosh. One time frame breakout, one time frame. These guys are doing well. At least they're winning. They're winning. This stuff works. The thing is, they've trained their eye to see this, and it's not all just the same. Like, you got to train your eyes. No. These guys are all trading one time frames. All right. Let's look at another one of mine then. Okay, so let's go through another example then, because I just deleted that one by accident, and I'm shooting this on the fly. So right here on the Nikkei, I would start with my daily time frame. I'm going to start off by drawing out my daily supply zone, right? Prices are going up into that daily supply. I'm now going down to my lower time frame and waiting for confirmation. It's currently making higher highs and higher lows, so I don't see any selling opportunity yet. So I will wait on the sidelines. Yeah, and see, that's the whole thing. You pick the time frame sequences that you want to look at. We talked about that at the start. You look at the markets that you're looking at, depending if you're scalping or swing trading. You always start off by drawing out your higher time frame supply and demand zones, determining the trend, and then waiting for prices to be inside your higher time frame. Are we inside higher time frame levels? Yes. Do we have the confirmation? No, we do not. We don't take the trade. Yes, we do. We take the trade, right? And so it's a flow chart. So if you want the flow chart as well as the ebook covering the supply and demand trading strategy, I mean, only for people that are serious. If you're serious about trading, I would recommend picking up the book, because it is important covering the supply and demand trading strategy here that I have for you. It's completely for free. But if you're really serious about trading, then you really want to be looking to be joining the Moneyball trading program. Well, you'll learn more about it here, and it's where actually you'll learn more about the mistakes that you're making in trading and how to correct them, and it will give you a 90-day plan to take action on how to become a profitable trader. You'll learn more about that in the book, and I'll send you some stuff as well. So if there was any video that I sent and mentioned throughout this video, I will have it in the description below. I appreciate if you guys like this video right now. Subscribe, and if you have any questions, you can reach out down below or reach out on social media at Moneyball Austin. In fact, I will have the one time frame set up above my head right now for you to check it out. Okay, thank you guys so much. Cheers. Bye-bye.